Hey everybody, Chris Engelbert with Englebert Financial Advisers in Allentown, Pennsylvania with the weekly Rotella QCast update. It's the first week of December, so we are doing our strategy update for the month of December. And we always start out with a cartoon, and we all know what was happening over Thanksgiving. If any of you had a great Thanksgiving turkey like I did, on Friday, we saw the stock market literally peel off over 900 points as far as the Dow Jones Industrial Average goes in one day. So obviously the news out there was that there's a new strain of the virus. Nobody really knows what that means yet, but the markets took it as a sell first, ask questions later. So what does that mean? Well, right now we are sitting around in November. We saw new all-time highs the last part of November, and then on the Friday before Thanksgiving, and then the last couple of days, we saw a sharp sell-off. If you look at my chart here, you can see that on the S&P 500, I have a line drawn right about the 5% correction level. And sure enough, yesterday and today, we came down, we tested that 5% level on the S&P 500. The question is whether or not it's going to hold. You can see the 10% correction level as well. Now, the S&P 500, as well as many of the major stock indexes, are still positive for the year, but this is now the third 5% correction we've had so far in the S&P 500. We had one in May, we had one in about mid-October, we then recovered, went on to new highs at the end of November, but the question is going to be, are we going to get a Santa Claus rally, or is Santa delivering a virus as far as in the form of Omicron? Now, if you look in the upper left-hand corner, you can see, I'm going to keep posting this because you can see the 5 biggest stocks in the S&P 500. And in a couple of weeks, I'm going to give you my preview for the markets for 2022, and it's going to involve what's going on with large cap growth, because the S&P 500 has really become a closet large cap growth index. And we don't think that bodes well for 2022 and the S&P 500. But let's take a look at the bond market and what happened. Also in the bond market, you can see that the fear trade ensued. This is a chart of the 10-year Treasury. And basically what happens, if you ever hear somebody talking about the fear trade is sell stocks and buy bonds. And what ended up happening was you saw on that Friday after Thanksgiving and the last couple of days when the market rolled over, because Chairman Powell said, hey, even if the virus is around, we're still planning to taper in the summer of 2022. And everybody's like, oh my gosh, how can he do that? We even saw rates go much lower than they have recently, piercing the 1.5% level on the 10-year Treasury and actually going a little bit below that. So again, the fear trade is where institutional and retail investors sell stocks and buy bonds because they're fearful of what happened. This was the fear trade that happened in the spring of 2022 when the first virus came out. You saw the stock market roll over big time. You saw interest rates go down dramatically. The 10-year Treasury got as low as 0.5%. So far in 2021, you've seen that the highest level of 10-year Treasury has hit is 1.75% back in March. And then again this fall, it's hit around the 1.7 level. But again, our preview in 2 weeks on what we think is going to happen with interest rates for 2022 is something that you want to tune in on. So what does it all mean? After a real nice recovery after the sell-off in mid-October through mid-November, S&P 500 went on to make new highs, but then a fear of another virus has caused a 5% correction in the market. The real question is whether or not we are going to get a Santa Claus rally in the next couple of weeks. This is something that's very well known, where at the end of the year for window dressing as far as portfolios, many portfolio managers buy their best performing names, and they cause the entire stock market, especially the small and mid caps, to start to float up again. If you want to see an ugly chart, look at the Russell 2000. It looked like the Russell 2000 was going to really break out for the rest of 2021. Instead, in the last week or so, it's been slammed hard as far as small and mid cap stocks go, because everybody's worried about another lockdown or having to close down the economy again. Again, my bullet number 2, you can saw the fear trade was in full play with interest rates on the 10-year Treasury going below 1.5%. But the bottom line is, until more is known about this virus, and what the government responses are going to be, we're going to have a lot of volatility for probably the next 2, 3, 4, 5 weeks. Because one of the things that came out of the news that we've had is that nobody knows if this new virus is more transmissible, whether it causes more people to, get sick. And so you're going to see that the markets are really going to be at the mercy of the ebb and flow of the news cycle, where one day the news is good, market from the Dow Jones Industrial Average perspective rallies 500 points. The next day the news is bad, the market sells off 500 points. We're not going to really get more clarity till probably the end of December as far as what this new variant is going to do. So that's our update for the first part of December. Again, in 2 weeks, we're going to be giving you our preview of 2022, what we think is going to happen with the U.S. economy, the U.S. equity markets, and interest rates. So stay tuned for that. Everybody have a great week, and we'll talk to you next week.